the case for Alibaba. So I got today for you Alibaba, ticker BABA. And the strategy here is a small amount of risk, massive upside, which is the kind of investment I like to do. And the pitch today is all about how is it that it's a small risk and massive upside despite all the negativity we hear in the market about it. So in case you guys don't know who, or you ladies and gentlemen don't know who Alibaba is, quickly, one of the largest online retailer in the world. A majority of revenue comes from online retail in China. What is super exciting is that this business is not all about online retail. I've listed this group of markets that they operate in. It's more than 20 different markets, from retail all the way to B2B payment, all the way to digital currency and social commerce and AI and mobile payment. They have it all. So it's a huge player in that market. Where the upside is really coming from is this analysis here. I'm going to move everybody here, sort of. So on the left-hand side, I have Alibaba, which we're talking about. And then on the right-hand side, I have same comparison for Amazon. So I'm comparing and making the argument that if Alibaba gets same price treatment or same price valuation as Amazon, which is one of its closest sort of comparison in the United States, there's a massive upside in there. So if you just use the price to earning ratio difference between the two companies, there's 2x upside. If you use the price to free cash flow comparison, there's 16x difference or upside. If you use product to book price to book value, we have almost like 5x upside. What is super interesting is that Alibaba, the valuation ratios that Alibaba is right now, it's one of the lowest in historical lifetime. So not only it's really low compared to the peak it was maybe a year ago, but historically, maybe only one time in the history of the company, they were at this kind of valuations. So that's where the massive upside comes, but also companies operationally strong, sales growth, double digits, profitable, tons of cash, management being effective in terms of deploying capital all along. They, in their last quarterly earning report, they talk about 30% revenue growth. And what's something very interesting is that their business internationally outside China is growing 50% plus, and they have 1 billion active accounts, active users, added 45 million users. So I know, I'm going to go here. I know there's a lot of negative sentiment about Alibaba related to China, the issue with the government and everything else there. But we just talked about these things are out of their control, and it's in the history. The company has gone through all these kind of things, and this is one of the lowest valuations that it's ever been. So altogether, I bought some shares for myself to put money where my mouth is. And thanks a lot. Happy to answer some questions at the end.
Yeah.
I had a question for Hoda about Alibaba, just with all the challenges with trade and international transportation and distribution of goods, and just some of the challenges with I think there's a perception issue with China and China stocks. So just curious if you see any headwinds around that.
Yeah, I mean, I think it's a really good point. It's definitely not a short-term trade. I think I didn't talk about it as I was going through it. For me, it's a long-term trade. It's the ones that are, this is mass, like I've never seen these kind of valuations for Alibaba or some stocks. So go in now and maybe keep adding, and then wait for another time for a couple of years. My real point here is that, of course, valuations is really down, but also if you think about it, if Alibaba just only gets the retail in China and just gets the growth rate that is in retail in China, and we know that's only 60% of their business, that market by itself is double-digit growth. So if it shuts down all of it, other operations and everything, just getting the wind from the retail in China, it's already going to have higher valuations and higher price. So I think the sentiment is deservedly negative, and I know there's tons of problems, but the idea is like take a little bit of risk for a massive opportunity, because the market is just growing. And It's one of the only companies, not one of the rare companies in China that is not a state-owned. It's very user-friendly. So there's a lot of good things going on about Alibaba, plus the valuation that if you're patient, we're going to get rewarded from my point of view.
Sure. I'd like to talk about the risk on Alibaba. I was a bit confused on the statement that it is low risk. If it was classically valued in any other country, I'd totally agree. But there's the whole issue with China, with Chinese stocks. You don't actually own the company, right? It's the whole. I mean, breaking that paradigm would require breaking the entire financial system, but that's a possibility with the decoupling of the West and East and some parts of East Asia and China. So I was a bit confused on, how is it low risk if, technically you don't even own, the actual firm, you own this holding company and this whole mess, right? I was just confused about that. It's always been my apprehension to Alibaba and, some, Chinese-based companies.
Hoda, you want to take that answer?
Sure. Let me make this one as well. Okay, there we go. Yeah, I think so. I should have explained it. Take a small risk for massive upside. I really meant it from our wallet point of view. So if you put $1, it has an upside potential of getting up to 16x. $1 can become 16x. And so I was looking at it from a portfolio management point of view. This is one stock that you could buy really a low value and you can get it 16x. And then the other thing about the risk related to Chinese stocks, generally those are common risks. I agree with you that they exist, but among many other ones, if you compare it to all other ones, the state-owned companies and things like that, Alibaba is very established. Its payment is already ingrained. Like Alipay is ingrained in daily lives of people in China. They've been using it that's why you see all these problems with the government, because they're worried about their payment, and they're how pervasive their payment is in that society. And also they have so much cash, not being a state-owned, all that good stuff. So relatively compared to all other, if you want to participate in Chinese market, especially now that the sentiment is low, Alibaba to me is one of the best bets because it has everything else going on for it. But generally taking risk in China is a risk, but small versus massive upside really meant from a portfolio management. $1 can get you up to 16x growth.
And Hoda, just to add on to your point, so I actually used to own, I had owned Alibaba for 5 years before selling it early this year for these very reasons, because of the Chinese issue. So I'll be honest, I kind of got a little lucky considering the place that it is now. But I have been dollar cost averaging into it for a number of years. I really think there's nothing wrong with the company itself. It's really those geopolitical risks, if you will. And so honestly, kind of looking at it from your perspective here, I tend to agree with you, and probably will start nibbling back into it. And if you're not going to go take off a huge chunk, right up front and just kind of allow it to layer in, right, it could really work out for you, to your point, because it really is another Amazon, but you're getting it at, a tenth the cost, if you will, just because of these concerns. So in my opinion, there's really no such thing as a stock without risk. The whole market rewards risk in general. And so this one happens to be an existential threat, if you will, versus an actual internal problem with the company itself. The one caveat to that is kind of all the turmoil with Taiwan of late. And I think that could have some pretty big ripple effects on the semiconductor industry, which I know Alibaba is not totally married to, but that division of East and West, if that kind of came to a head, could potentially be a headwind. But again, if you're going to kind of layer into it and look at it over a long period of time, I think you could be a big winner.
Negative sentiment, if anything I've learned over the course of years that I'm investing, is that negative sentiment is always overblown. And at the time, it always seems a lot more worrisome. Granted, there's risk with Chinese government and rules and regulations and global economy, all that good stuff. But if like Chinese economy going to go down, like the whole market is going to go down with it, right? So I think when you look at the company's strengths and compare it to every other Chinese, if you want to participate in the Chinese market, I think this is one of the best ones you could buy for all the reasons we've been discussing.
Yeah, sure. I'll just contribute a little bit. So I'm not 100% sure about Alibaba, but most of the Chinese VIE stocks actually do have an ability to convert the VIE security into a mainland security. So for instance, you could convert BABA into 9988 on a 1:1 ratio. So it kind of hedges off that risk in a natural sense. Having said that, in a communist nation, communist government rather, things can go differently from capitalist economies. So that may not hold true. So I'm just saying you should keep the risk in mind, right? For instance, if I'm not wrong, the recent HNA bonds, the WMPs and the bondholders actually rank in pari passu, which means they were ranked equally. But post the restructuring, it ended up being the WMP investors got seniority over the bond investors. So things can be different, right, in a different country, just to keep in mind. But on paper, I think you should be quite relatively protected.